this is an introduction video for my project FintechModeler, which is available on GitHub. So this is a project I made which is about financial and technologies. So it helps you calculate different prices for financial instruments. So if you look at the source code, the main calculation part is called DLL, and it contains some source code which I currently use to calculate the price of European options, if you have some notions about finance. So this is a C++ code, which can be called from a backend, which is also available on the GitHub repository. That backend has been implemented in ASP.NET. So if you look at it, you can find here the controller for a REST API, RESTful API. So that RESTful API will receive request and call DLL, which has been again implemented in C++ and compiled, and which is available on the server. And the third and final part of my application is the front end, which is implemented using React. So you have different components, a couple of them at the moment. For example, one of the components will let you price the options through a nice window, which I implemented using material user interface, which I integrated. So then you have the Cloud Ops and Azure part. So I have deployed my application on Azure. First, you have the back end, which is available on App Services. Okay, if you browse on the app, you won't see anything because it's a RESTful application backend. So your API, so you have to send the API request. You can, however, use curl to send a request to the backend. So, for example, if I send a post request, okay, I will receive, I have sent some parameter and I received here's the volatility for an option for which I provided parameters. The parameters are here provided by a file which gives a payload for the RESTful request. There we go. Okay, so you have the parameter, so the URL is the same as on the Azure backend website. So yeah, I can curl to Azure to my backend. The other part, which is also deployed on Azure, is the front end. So I have used a static application hosted also on Azure. Here it is. So you can browse through the app. So this is the React app, which is built and deployed as a static website on Azure. In order to deploy it, Azure is using also a GitHub action script, which is available also in my repository. So here you have the YAML script, which let deploy on Azure the React application once I commit on the GitHub repository. So now for the option price calculator, there it is. It is actually a simple app. You can provide some parameters. So for example, I will take an option here I have a list of call and put option. I will take a call option. So for example, here for Apple, you have an option which expire in 6 months, and if I buy that options, I have the right but not the obligation to buy an Apple stock share in 6 months from now, when the option will expire. So the strike price, or the pre-agreed price at which I will be able to be allowed to buy that stock, is $210, which is a bit less than the price of the Apple share today, which I should show you later. And the price for the option is 30. The price for the option is 30. $32.95. So I need other parameters like the price of the Apple shares, which is here, $227. Also something called volatility, which indicate how fast the option price are changing today, which is 80%. Plus the last parameter I need is the risk-free rate, which is currently found from the 3-month treasury bills from the US government, which is 4.27. So if I put all those parameters in my app, so I can give, I know that my option will expire in 6 months, so half a year. Here it's, I will calculate on 16 periods. The volatility, we said it was 18%, 42. The risk-free rate is 4.27, and the share price today is 227 for Apple. And we said that the pre-agreed price at which I will be able to buy the share in 6 months is 210. So if I calculate, I should have a price of option of 25, which is a bit less than available on the Nasdaq website, because we've seen that they are asking $32 instead of 25. So it means that basically the price of the share is higher than the expected price, which means that today is due to announcement and decision from Donald Trump to impose tariffs on the Canada, Mexico, and China. There is a general drop in the price of the shares. Apple has dropped. It was more than 127 yesterday, which means that in 6 months from now, the market expects the situation to be up again and bullish again for the Apple price. So today, a lot of people are buying those call options, which let you in 6 months buy the Apple share in for the price of $210. So we expect that in 6 months the price of the Apple share would be well above $210, which would let the buyer of the options to make a profit in 6 months from today. And this is why the market are buying those options at a much higher price than the theoretical price, which should be 25, and we see that it is around 30 today. So the last feature of my React website is the volatility tab. So it's the opposite of the pricing of the option. So for example, if I take an option which is around $30 for a call option, if we say, for expiration at 6 months, half a year, an initial share price of 227 for Apple, a strike price, pre-agreed selling price for the share in 6 months will be 210, and the risk-free rate is we see that, okay, the volatility, which is how much the option the share price are changing today, are actually not of 80% as indicated by the index, but it's more around 45%, which means that the price of the share are moving very quickly today due to Donald Trump's announcement, which showed that, again, the market expect a recovery in 6 months for the share price. And so today, a lot of people are buying those call options, which are insurance and let you speculate to buy the share cheaper than will be in 6 months, and so to make a profit due to that speculation. So this is for my application. It's a quite simple application, but I've implemented the different backend and front-end parts in React, ASP.NET, and C++ for the calculations of share price and option prices. So okay, this is my application.